Money on my mind, looking for a dime. James Locke in the house, gonna help you shine.
Welcome to the Poole Locke YouTube channel. I'm James Locke. Today we're going to answer some of the Ask James questions of the day. Our first question is from Carol, who says, I have plenty of options in my 401k to diversify as the markets seem to be broadening, but how do I know which ones to pick? All right, Carol, I assume you're talking about the stock market if you're talking about broadening. Right? Now it's hard for me to say because I don't have your options in front of me. But what you probably want to do is to go out and get a report. Right? Let's say a Morningstar report or something like that, and take a look at a couple of things. First of all, you want to look at the percentage in the technology sector. Right? So if you get a report for the S&P 500, the Standard & Poor's 500, it will tell you that it has a pretty high percentage in the technology sector. Then the others you can look at and figure out, okay, which one has a lower percentage? Right? What you also want to do is look at those reports for growth versus value, because the growth of your stocks tend to pay a lower dividend, right? The momentum stocks, that's going to be a lot of the technology pieces. Not all the time, but most likely a lot of technology sector pieces. And you want a more value approach, which tends to be things that have a lower price to earnings ratio. So right now, value stock PEs are probably, they won't be maybe in the 20s, it could be in the mid-teens or even the low teens, right? So the third thing then is you want to look at dividends, right? Those that pay a decent dividend rate. When I say decent, I'd say certainly over 2%, but if you can get 2.5%, 3% minimum, that would be great, right? So something that's particularly important for retirement investors to understand is that dividend-focused funds often have lower volatility than growth funds, right? Now, this can be crucial when you're approaching retirement and can't afford significant drops in your portfolio value. So look for funds that focus on companies with long histories of not just paying, but actually increasing their dividends year after year. These are sometimes called dividend aristocrat stocks, in the investment world. So again, number one, get a report for the S&P 500. Figure out what percentage there is in technology. Get a report for the other funds that are in there, and look for ones that have lower technology exposure. So that's number one. Number two, have more of a value approach, not a growth approach. A report like a Morningstar report should tell you that. And lastly, something that pays a formidable dividend. But here's one thing you need to know. A lot of 401ks don't have the types of options or don't have a lot of choices in the world of the options that we just described. So now we could talk about alternatives, right? You might just have in your 401k truly limited in its options, right? So in that case, you might want to consider balanced funds. They combine stocks and bonds, or target date funds that automatically adjust the mix of investments to become more conservative as you approach retirement. So while not perfect, these can be a good alternative if you don't have access to dedicated dividend-focused funds. All right, thanks for your question. And if you'd like to send in your question, you can do so by emailing them to poolelock@poolelock.com. We'll move along to our second question. And this comes from Beth. She asks, do I really need an estate plan? I don't have many assets, just my house, my car, my 401k. I've never married and have no kids. Absolutely, Beth. Estate planning is crucial for everyone, regardless of the size of their assets or family structure. So let's delve deeper into why it's essential, especially when considering retirement and reducing financial risks. First, you mentioned your 401k. Now that typically passes directly to beneficiaries named on the account. So ensuring your beneficiaries are up to date is critical to avoid complications. However, assets like your house and potentially your car and savings account may not transfer automatically. Without a clear estate plan, state laws dictate who inherits these assets, which may not align with your wishes. Now, beyond asset distribution, estate planning covers scenarios but beyond death. For instance, what happens if you become incapacitated due to illness or injury? Who will manage your finances or make medical decisions on your behalf? Without a designated power of attorney for financial matters and a healthcare proxy for medical decisions, these critical choices could fall into the hands of the court system, delaying important decisions and potentially leading to outcomes that don't reflect your preferences. So consider the importance of a living will as well. This document outlines your preferences regarding life-sustaining medical treatments, ensuring your wishes are respected, even if you're unable to communicate them directly. And so there's lots of moving parts to an estate plan. Let's address the complexity of your situation. Being unmarried and without children doesn't exempt you from needing an estate plan. In fact, it underscores the importance of clarity and specificity, like being specific in your planning. You have the opportunity to dictate precisely how you want your assets distributed and managed, avoiding potential conflicts among family members or unnecessary legal battles. Right? Ultimately, Beth, estate planning isn't just about preparing for death. It's about securing your financial and healthcare decisions throughout your life, right? Especially as you approach retirement. By taking proactive steps now, such as drafting a will or trust, establishing power of attorney, and outlining your healthcare preferences, you can ensure peace of mind and safeguard your interests during uncertain times. So yes, Beth, estate planning is essential, regardless of your asset level or family structure. It's about empowering yourself to make decisions that reflect your values and preferences, both now and in the future. Thanks for raising this important question. It's crucial for everyone to consider their estate planning needs seriously. All right, great questions today. If you'd like to send in your question, you can do so by emailing them to poollocke@poollocke.com. And if you like what you heard, go ahead, like and subscribe to our channel. I'm James Locke, your retirement income source. I'll see you next time.
Money on my mind, looking for a dime. James Locke in the house, gonna help you shine. Retirement is near, don't you live in fear. Listen up, my friend, let me make it clear. Savings in the bank.